Break-even point is this: when the market price of an asset is the same as the original cost. So many business owners try and use that same terminology for their own businesses. Watch this. So they say, I am going to get into the transport business. I'm going to buy a motorbike. The motorbike costs me 100,000 shillings to buy, $1,000 to buy that motorbike. So when this business eventually pays me 100,000 shillings or $1,000, I have now broken even. No, that is not the break-even point of your business. The break-even point of your business is when the cost of running that business equal the revenue of running that business, where there is no profit or loss. That is what we must begin to understand. So now watch this. I had to sit down with these people and begin to explain, and we spend a whole 3-hour session in the Centonomy class working on this, how I make money from my business. Because I can see all the questions coming in the chat box. So how do I decide how much salary I should pay myself and do all these things? This is simple mathematics, which we will do in the class. It's very simple, but it has to be based on the same discussion that we have had here on break-even point. Entrepreneurs, and this is why entrepreneurs tend to be the wealthiest people. I'm going to give you very quickly as I end now. Very quickly, entrepreneurs tend to be the wealthiest people in the world because they eat 3 times from their business. How do you make money from your business? Number 1, you take a salary. And when we talk about a salary, it's not just any salary that you want. It's based on the work that you are doing within that business. If you want a benchmark, you have to look at the work that you are doing within that business. Number 2, you make money from the profits of the business. But the money you make is not called profit. It is called a wonderful name that you have heard many times. It's called a dividend. A dividend is a portion of that profit that you make at the end of the year or at the end of a financial period. You cannot take a dividend if your business has not broken even and returned what we call a net profit. Because the dividend is a portion of that net profit that you, not all of it, because you need to reinvest some of that money for the business to continue to run. And number 3, as an entrepreneur, you eat from your business when you bring other people on board. Other people will see that there's profitability, and that's what we have been able to go. So we have to begin to get to that place where we're able to break even and return a profit to ourselves. If you, as an entrepreneur, are eating your what we call gross profit, when I take my cup, I bought it for 500, I sold it for 1,000. If I take my 500, you are not in business. Business is when you are able to return what we call a net profit from your business. There is a difference between what we call gross profit and net profit. So write this down. Gross profit is realized exactly as we've been talking about, where you purchase an item, whatever it is, could be a cup like this, and you go into the market and sell that item for a higher price. So that initial margin is what we call gross profit. Now, let's apply this to our lives. If it is a side hustle, which means I have a job, like right now I'm employed in Centonomy, I have my income, which is coming from the business that is paying me my salary on a regular basis. If I go out and spend my time, and this is what we encourage people to do at Centonomy, look, you have extra time on a weekend like this, why don't you go and purchase a few glasses and try and see if you can sell them at a higher price? No problem. That mathematics works because I have my own source of income that is supplementing that business, which I'm doing as a side hustle. I have everything in my life is taken care of. All I'm doing is trying to increase on the returns on my money. So like the lady exactly that we're talking about, the lady on the pig farming, for her, while she was working, she was getting enough income to pay for that farmhand, to pay for any of the other costs that were there, to pay for her lifestyle. So when she sells a pig, it seems profitable. But what she was not recognizing is that not all profit is the same. She was earning what we call in business gross profit. Now watch this. The next level of this, and the same thing for the lady in the boutique, that's exactly what we're talking about. The next level of profit is this, what you now begin to call net profit. So watch this. To my team, guys, as quickly as possible, as guys join, please make sure that we're muting them so that there's not distraction. The next level of profit is what we call net profit. Watch this. In that boutique and that pig farm and that salon, we have a group of expenses called, in various places, they have multiple names, but you might know them as overheads. You've heard of those overheads. You may have heard of them as operational costs or just general business costs, which for a business to be profitable, we must cater for them. So watch this. Watch this. In that pig farm, I need your help in the chat box. Begin to list in the chat box as quickly as possible what you see as overheads or operational costs of that pig farm. Kindly, quickly in the chat box, because I need your help. So Grace, thank you so much. There's transport, because there's feeds are coming along. Feeds, salaries, because she had not thought about the salary of the guy who was working there. Water, which becomes an issue. Expenses, all those things. Vaccinations, vet services. Look at that, maintenance. All the things that you have written there. So I'm encouraged that you're part of it. There is one major cost that many entrepreneurs, myself included, when I was running my business earlier on, one major cost that we often forget. Can I point them out to you? Phyllis, me. So when you talk about salaries, the one person that we often forget in our business is ourselves. Can I tell you, the lady who was running the pig business and the lady running the boutique, both of them were not taking a salary from their business. Both of them would take money out of the business only if there was some money left after paying everybody else. They had not accounted for, watch this, they had not accounted for the work that they are doing. And I know this one is tough for many of us to begin to get, but you don't understand that you are doing a significant amount of work within your business. Now, I'm not talking about just paying yourself whatever salary comes to mind, but what I'm talking about is, have you accounted for the work that you are doing within your business? Because without accounting for it, then it means that the production of that business is coming at a cost that is not sustainable. Essentially, in this I'm going to use tough words. Essentially, your business is functioning on slave labor. You are a slave in your own business because you had not accounted for the work that your business is doing. So here's that you are doing, in your business. So now watch this. A profitable business is one in which there is net profit, which means there is profit after all the costs have been covered. Not just the cost of the goods or the services that are being prepared, but all costs. Watch this. You achieve that point of profitability after you have achieved this. Write this down, your break-even point. Now, this term called break-even point has been misunderstood because it's used in two different separate spaces. So let me define it for you so that you can understand why there was a misunderstanding, okay? The break-even point of a business is this. It is the point at which the sales revenue, the money that you're making from selling your goods or services, the money that you're making from selling your goods or services is the same or equal to the fixed costs plus the variable costs of that business. Okay? So the fixed costs are like your operational costs. They're your overheads, the rent that you're paying, the salaries that you're paying, those other elements, all that go into the running of electricity, water, utilities, all those things, plus the variable costs, which is the costs of production, the cost of goods and all those elements. When all your costs, all costs in that business are equal, exactly equal to the cash flow, the revenue being produced by that business, that is called the break-even point. So at that point, the business has not made a profit, neither has the business made a loss. Are we together? So at that point, the business has not made, I have seen businesses, come on, you can do the research that you want, multi-billion-dollar businesses that break even. They are not profitable, neither have they made a loss. They just break even. Billions of shillings are running into that business, but that is it. Are we together? So the break-even point in a business is the point at which the sales revenue or the revenue that the business is generating is exactly equal to what? The costs of running that business. At that point, you have not made a profit, neither have you made a loss. If you now make any more money than that break-even point, now you have become a profitable business. Now you have become a profitable business. So, watch this. The reason that we are confused by this terminology is this. In investment,